Hi, it's David. I received a frantic call from a client that I had spoken with a couple months ago who was just starting to think about buying a home. They ended up deciding to move forward with another lender who was offering a lower rate at the time. It happens. We can't always have the lowest rate. I get that. But what this client was so concerned about was that the other lender offered him one rate at pre-approval and then received his loan estimate at showing a much higher rate and fees. Now, keep in mind, a rate on a pre-approval isn't a locked rate. So in his defense, rates do change daily, and it's very typical that the rate quote on a pre-approval is different from the actual locked rate. However, where I got frustrated was that this client was told by the other lender that if he even spoke with another lender and they pulled his credit, that his loan would likely get denied since it would cause his credit score to drop and he would no longer meet the program requirements. What? I had to ask him this twice to explain because it made absolutely no sense to me. First of all, once a lender has pulled your credit, any future inquiries by another lender don't impact the score on their report. So it would have zero impact on his ability to close with the original lender just to have another lender pull his credit. For example, if he originally pulled a 700 credit score and then I pulled a 695, his score is still 700 with that other lender. Zero impact. Zero. Second, why was this lender so concerned with a borrower who's shopping for the best rate and terms? After all, isn't that our job, to allow borrowers to make sure they're getting the best deal? And why was he even concerned about the score dropping below the minimum required anyway? This particular borrower had great credit. He had a 724 score, a 724. That means no issues qualifying. Even if his score had dropped a little bit, there'd be no challenges from just a pure credit standpoint. This wasn't like the case of a borrower who had a borderline score like 619 and barely was qualifying, and the loan officer was just nervous about getting it approved. He was just trying to plant fear into this first-time home buyer who had probably never had any financial education about how credit scores even work. He figured if he could make the guy think his loan wouldn't close due to another inquiry, then he could just charge their higher rate and fees and keep the loan for himself. Well, guess what? Fortunately, this borrower decided to call me. I not only explained the process of credit inquiries and how it impacts his score, but also how we could still close the loan, give him a much better interest rate and lower fees. By the way, they were charging like 2 points origination and some other nonsense fees for a higher rate to begin with. So the bottom line is, number one, it always pays to get a second or even a third opinion when you're going through the mortgage process. It's a big purchase. It's probably the biggest purchase you'll ever make. So make sure you are getting the best deal. And number two, it doesn't hurt your credit score to have an inquiry. In fact, the credit bureaus changed the requirements where if a borrower pulls their credit multiple times on a mortgage credit report within a 45-day window, there's zero impact to their score. So even if they talked to him a month ago and then I came in and pulled his credit, there still would be no impact from that second inquiry. So any lender that's telling you this is just purely trying to hide the fact that they don't want you to leave and shop and get a better rate somewhere else. And they're just trying to keep the loan on their books. So do yourself a favor and make sure you're getting second opinions. And like I said, even a third sometimes. If you have any questions about this, or if you've been told something similar from another lender, please reach out and let me know how I can help. Have a great day.